the rest of the crypto ecosystem also fell around this time. So I'm assuming that's related to correlation, and there wasn't a lot of other projects themselves that were under pressure, but just because of the general panic, that's all sort of spread to the whole thing. So maybe you could answer that in a minute. But the other thing I was thinking about when I was reading a lot of this stuff over the weekend and over the past few days, and I wrote about this in the Insider recently, was this is really just a part of the creative destruction process that happens in new and emerging markets. And if we think about cryptos being largely unregulated, there's no central party backstopping any panic or coming to the party and being the buyer of last resort, which happens in traditional financial markets. And it reminded me of an episode that happened back in the early 1900s in the US, when effectively they were sort of Wild West markets. The Dow Jones was still pretty, there was no central bank at the time. The big financiers drove the markets, and the little guys were always sort of late to the party. And there was this one instance where there was a corner of, I think it was called the Great Northern Railroad Company, and the market shot up and everyone was on it. But while the small investors were trying to get onto that project, the big guys were starting to short it. And within a couple of days, it's called the Panic of 1901, if anyone wants to look it up. Within a couple of days, the Dow Jones fell 60%. The big guys made a killing on the shorts. The small investors were absolutely destroyed. There was no central bank to step in and provide a floor. But the market went on to survive and continue growing, and et cetera, et cetera. And I thought, well, this is how these markets evolve. There are people that see weaknesses. They will attack those weaknesses to make a profit. And if you're not quick enough or not smart enough, you're going to get bitten by these type of attacks, or you're going to get completely wiped out. So I guess what I'm saying is I see this as a strengthening episode in the whole crypto ecosystem and its ability to grow and continue, and the people that are involved will look at their projects and make sure their projects aren't as exposed and that they're covering themselves from these type of attacks. Whereas a lot of the articles that I read on the weekend were, I told you so, crypto's a scam, this was always going to happen. So yeah, I'd just be interested.
Can I make a comment on that? Because it's a good point, right? Human nature doesn't change, and you have various things about regulation are good and things about regulation that are bad, and you get things about unregulated markets that are good, and you get things about unregulated markets that are bad. Now, obviously, I feel sorry for anyone who's lost money in this Terra ecosystem. Some people would have been wiped out, and hopefully the Luna Foundation can rectify some of that in some ways that they can, and they're trying to do some stuff. But what I noticed in the weekend's papers is you get this whole lot of Schadenfreude. You get this every time you're in crypto. Every time there's a downturn, you get a bunch of people come out with "I told you so," and usually, it forgets the fact that if you go back any time longer than 2 years, anyone who's been in crypto is well in the money. It focuses very on the short term, but a lot of the time they get the facts wrong as well. So I'm seeing people describing this Terra USD incident as crypto's Lehman moment and how it's going to bring the whole thing down. When in reality, it's like saying that, because a small bank in Zimbabwe went bankrupt, that means the whole banking system is going to fall. You can't correlate the two. And unfortunately, with a lot of the mainstream reporting, they don't even, it's not even ignorance. A lot of the time they get the facts wrong. Like I read some reports which said that Tether, which is a different stablecoin, was collapsing, and that's not true at all. The one was called Terra, so it was even a different name. And I've seen people try to attribute the issues with this one project, which was designed badly and was exposed for it, trying to make that as an example of, oh, look, I told you, the whole of crypto's bad, which is completely ludicrous, because every single crypto project has different merits. They're based on different token economics. They're based on different technology, different cryptography even. So the mainstream press, you have to be very careful. It seems obvious to me that there's a lot of people in the mainstream press that want crypto to fail. They do not want it to succeed. And I can only put that down to two things. One is maybe they're beneficiaries in the existing system, so they don't need a better system, which doesn't account for billions of people that actually do need a better system. Or secondly, they're just salty because they've missed the boat, and they've missed out on investing in the best performing asset class of the last decade. And they get annoyed at the fact that, a 20-year-old on Twitter is probably making more money than them, and they're just annoyed by it. And look, that's human nature, that's fine, but I have yet to read a worthwhile article in the mainstream press that has looked at this critically and actually said what are the realities of it are. And probably the only one which I read today actually was from the Commonwealth Bank chief, Matt Comyn, who said that, look, stable coins are going to be an essential part of our future, but we probably need regulation. Now that's a fair comment. I don't think anyone in the crypto ecosystem would say we don't need some sort of regulation around that. But you've got to remember, regulation isn't a panacea for solving things in finance or investing. I'll give you a quick example. I read one comment this week that said, for Tether, which is the big stablecoin, said, oh, look, it's not backed by anything. And if everyone went to withdraw their money from Tether all at once, they would find that the money wasn't there. Right. That's what the comment was.
That's how the banking system works.
That is the banking system. They basically projected the banking system onto this stable coin. Yeah. And I was a financial planner actually in 2007 when the GFC hit, and we'd been out selling these mortgage income funds as almost like deposit-like investments, but with a better rate of return. And they were invested in properties, and you get the rental return and stuff like that. When the GFC hit, suddenly there was a freeze on redemptions. I had clients coming in that said, I want to take my money out of this fund. And I'd be like, they froze it because they were invested in illiquid properties that you couldn't sell.
Everyone wanted to get out at the same time.
Yeah, correct. It was the exact same thing as what could happen. So crypto is not going to solve problems like liquidity in a crisis as any more than regulated financial products are. So to think that you solve these things with regulation is not true. In a panic, the liquidity of the market is the thing that matters. And just to add some facts to Tether, because Tether cops a lot of criticism, and it's not one I've recommended for subscribers, but at the same time, I understand how it works a lot more than the people criticizing it. Yep. Now, Tether, some people try to attribute Terra and say, well, that means Tether's going to collapse as well, even though Tether's completely different. Tether is backed by government bonds, AA rated plus bonds for the vast majority of its backing. Around about, I think it's 7 billion was actually redeemed from Tether over this last week, as some people maybe did panic, and they got dollar for dollar back. So they went back to Tether, they sent their Tether tokens back to the Tether treasury, and the Tether treasury gave them their money. So that was 7 billion. So the market cap of Tether fell from, I don't know, about 84 billion down to about 75, 76 billion where it is today. And everyone who went to redeem got their dollars. Now, the argument even saying that if everyone went at once and tried to get their dollars back, they wouldn't, could actually be true to a degree because the value of bonds does fluctuate, right? But it forgets a couple of ways that the Tether stablecoin is constructed. And this is why it matters understanding how these things are constructed. For example, a lot of the backers of Tether are exchanges that actually need Tether so they can do arbitrage opportunities to send Tether around different exchanges. So that's one. So they're unlikely to be sellers in a hurry. The second thing is you can only redeem your Tether through the Tether treasury if you've got more than $100,000. Now, that's a little safety net, right? Because what it does is it allows big players to use it and redeem it if they need it. But for smaller players like me, for example, I can actually redeem mine for dollars, which is fine because I don't care as long as the peg maintains itself. Yep. But from a system point of view, what that means is there's a lot of smaller players like me that aren't going to come in and redeem all at once because we can't. So that's a system design. That's not a flaw in the system. That's probably been put in there as a way to protect against that flood of panic money. Yep. So, so there's a lot of what I'm trying to say, there's a lot of mistruths about how different stable coins are produced. Terra USD was done in a certain way, which had inherent risks, which have been exposed, which is great because it means that you won't get other experiments like that, which means it's been brought down before it was too big to fail or anything like that. Think about it this way, it's like a bank almost the size of ANZ failing, and the crypto ecosystem hasn't missed a beat. No other projects failed. There's not been any government bailout. 80,000 worth of Bitcoin was sold into a market that bought that up. So that's a very important point as well. It shows the strength of buying was there to soak that demand up. None of the DeFi projects failed. All you've got from this is a whole lot of panic from the mainstream trying to have their I told you so moment. And you've had a few projects that have maybe had to rethink the design. But like you said before, that's the strengthening aspect. We won't see another Terra USD in the crypto ecosystem. But will we have another Lehman in the traditional banking system? Probably, because no one ever has to pay for their missteps.